AMC stock remains very, very strong. The price action is still, on a bullish sentiment, especially since, the last, I would say 2 weeks time, when the market was, on the way of finding, somehow a bottom, and, having the next bull run to recover a little bit, and things look good. Things look good, especially as the Dow Jones reclaimed the 32,000 mark. Now, something specifically interesting, but not unusual with AMC stock news. It's every good news coming from the company, every good news coming, which is actually bullish for the stock. They find somehow a way to turn it on a negative, all right, as if it wasn't a good thing. So I'm talking about the news behind AMC stock jumping almost 8% yesterday, Wednesday on the trading session. AMC announced that it bought back some debt recently at a 31% discount. So they were able to work with the creditors and to save some money, to pay less money than they were expected to. And it's a good sign. It's a good sign because you can't pay debt if you don't have money to pay that. And now one of the criticism coming from the analysts is that, well, AMC still have $5.5 billion in debt. That's the analyst who covered it, giving it a sell rating of still $1 price target. This is astonishing, man. It's beyond me. I mean, not even a $5 price target, not even an $8 or $12 price target, not even a $6 price target based on where the stock was prior to the pandemic, because the reality is the company is in a way better shape financially, from an audience perspective, from a balance sheet perspective. The company is way better than it was 2 years ago and even prior to the pandemic. Yet they are still giving a sell rating with a target price of $1 a share. It doesn't make sense at all. You will think maybe these guys are being paid to write these articles to continue to add pressure or negative sentiment into the stock price action. So it doesn't matter, because when you know what when you take a little bit of, perspective, and I will share something really interesting with you. This is America's biggest corporate debt, and this is kind of a meme, actually very funny, from people like these guys who are always, bearish on AMC. Including this article that I'm just, this analyst who's giving a $1 price target. AMC has like $5 billion in corporate debt. Of course, paying off, $50 million, it's like a drop in the bucket of the $5 billion. But using that to kind of give the impression that AMC is in a specific bad situation, or in a unique bad situation. What is confusing here, because if you look at America's biggest corporate debt represented by this whole diagram here, you can see that companies like Comcast, company like Ford, Verizon, they have over $100 billion worth of long-term debt. All right. You look at even companies like Apple. Apple has $93.7 billion worth of long-term debt. Even though they have, a significant amount of cash, still they have a significant amount of debt long-term. You look at GE, you look at, Home Depot, you look at Dell, you look at IBM, Oracle, CVS, you look at McDonald's, you look at Pepsi, Coca-Cola, Cat, P&G, UPS. I mean, all of these big companies, Oracle, Cisco, Amazon, GM, they have long-term debt, because debt is part of the financial structure of a company. It makes sense financially for a company to take debt in order to invest. That's why when you want to pay a house, you want to pay a car, you take on a debt because you don't have cash. But even if you had cash, it makes sense financially to do so. But somehow, as I mentioned earlier, they always try to turn it as a negative, even when it is bullish, even when the market appreciates the news, turning the price action into positive, like we saw yesterday on Wednesday. All right, because this means that the company ultimately, even though we will say this is a small steps, the CEO said small steps forward are still steps forward, because this might, actually be the start of a new strategy for the company to start paying off debt. While the amount announced on Wednesday was a small portion of the overall debt, it could signal a plan to lower debt moving forward, something of which these analysts or the majority of analysts may take note of, and they're not mentioning this on these articles or whenever they're covering this news. So you wonder, why is this whole thing coming from? Well, we all know. We all know what is the news because there have been numerous, occurrences, numerous illustrations of these type of articles or news research firm working in collusion with, some of the short sellers in the market. Now, one thing is, this is not new for us who've been here, a couple of years. But the thing is, those type of news means that a better balance sheet, a better financial position for the company means that it is more attractable. It is more, attractive, I should say. It is more, interesting. It will drive capital whether you want it or not. So, the haters can choke on this news. The haters can choke on this news because it means that it is bullish for the future of the company. By bullish, I mean a company that's paying off debt, a company that has a lot of cash on hand, a company that has continuing, increase into income, definitely is a company that is placing itself on a map for people to buy it. But the retailers are already buying. So the money ultimately will come from, institutionals, money will come from people that were sitting on the sideline and willing to see some sort of, turnaround from a fundamental standpoint. And I do believe that we will see some more positive news coming from this on August 4th, when we have, earnings being disclosed by the company. I guess they're going to have pretty interesting, surprises there. But as I mentioned, there are going to be people that are looking for that and see signs of, okay, now I need to pull the trigger. And with the market recovering back up, it will suck being a short right now.